If you are someone who has set up a trust for someone, or in other words, a trustee of a trust, listen up, because there could be big changes to reporting requirements coming your way for this taxation year. Here with the details, Nicole Ewing, Director of Tax and Estate Planning at TD Wealth. Lovely to have you here.
It's great to be here, Kim.
Okay, so let's just start with, I think probably people will know if we're referring to them if they're a trustee, but this is someone who set up a trust.
Somebody who set up a trust, think here about family trusts. If you've done an estate freeze, for example, you may have used a trust. But this legislation is going to apply to people who might not even realize it applies to them. So
explain that.
So perhaps it's very broad, expansive definition of which trusts these apply to. And so in the past, those who needed to file returns were a relatively contained group, and the rules as they've now been written are going to apply to many more people, and perhaps to people who are trustees and not even realize that they are.
All right, so first, I guess first thing is to understand, are you a trustee? You know, by the definition of are you a trustee? What is about to change?
Okay, so currently, if you have a trust, if you are only required to file a trust return, so a tax return, if the trust earns income and or there's been a distribution to beneficiaries.
Right.
And you're not required to really provide any additional information about who's involved with the trust. The rules are changing now such that it applies to all express trusts, say for a few exceptions, and it also applies to the information that you need to provide, and you need to provide information about people, trustees, beneficiaries, many more people. This is not information that's been collected in the past.
So I guess, and I'm going to paraphrase here, so someone in the past, if they had a trust that didn't do much, it was kind of idle, right? They didn't have to do anything. Now they have to do it.
So here, perfect example, somebody who might have transferred the cottage into a trust. We might transfer a property, perhaps we've done an estate freeze and we have a trust simply holding shares of a private corporation. If there had been no activity in that trust, and essentially just waiting, there would not have been a filing requirement in the past, and that has changed.
Can you tell me a bit more about what will have to be reported then? What's the new normal?
Okay, so firstly, which trust this applies to. So as I said, express trusts, family trusts, etc. It also is going to apply to bare trusts. That can include things like in-trust accounts that you may have set up with a minor child. It can perhaps include even jointly owned accounts or property where there's a trust relationship. And you'll need to provide information about the trustee, about the settlor, including, so this is the person who's started the trust, but it will also include potentially people who have made loans or contributed to the trust, information about beneficiaries, as well as contingent beneficiaries.
What does that mean?
This is a big one. This is, when we used to draft these trusts in the past, you sort of provide as much flexibility as you could, and you would include potential beneficiaries, so maybe the spouses, future spouses, or children, great-grandchildren, and so on, and corporations and trusts and all of it, not really intending necessarily that those people would ever actually get any of the property.
Just like in case.
Just in case, we may as well put them in there, no harm done. Well, now we need to provide information about their names, dates of birth, their addresses, their residency status for tax purposes, tax information number. So really a lot of information that you will need to reach out to those individuals to collect, and perhaps this might be the first time some of them are even aware of the fact that they were named in the trust.
Because you didn't tell them.
Correct.
Oh, wow.
Yeah.
That is interesting. How far does a trustee have to go to give the CRA the info?
Well, I mean, this is an interesting time because we don't actually have the details. So this is legislation that has not yet received royal assent, but is by all indicators going to come into effect. The latest draft legislation was out August of this year, and it is intended to apply to taxation years ending on or after December 31st, 2022. We don't have the forms yet. We don't know what information or the form of the information that it's going to be need to be provided. We're not sure yet about what will happen if a beneficiary refuses to provide the information, or we're not able to track them down. And so there's a lot of unknowns at this time, where those who have the responsibility to report really need to be thinking about what they need to do between now and that tax filing to be in a position to provide the information that's been asked.
And I guess the other question with this too is that we don't know yet what the forms are. We don't know about the information, but do we have any sense of what the penalty might be if you do not provide it?
We certainly do. That was one of the very clearly, the penalty is big. So we're looking at a minimum, the greater of $2,500 and 5% of the value of the trust in that year.
Wow.
That's considering, again, the example of the cottage that I gave. Many of these cottages can be in the multi-million dollars, and it had been sitting there, and if the trustee isn't aware that they now have this obligation to file, and usually ignorance of the law is no excuse. I don't see any reason why that would be different in this case. And so we may have people who are going to encounter very, very significant penalties.
Let's now that we have people's attention in terms of what we
it's a big deal.
It is a big deal. Why do you think this happened? Why did we see this change in policy? What is this solving?
This is part of the trend towards that greater transparency. We want to know who has a beneficial interest in property, not whose name is written down, not some numbered corporation where people might not even know who that really is speaking about. It's a way of knowing who actually has an interest in the property. And it's intended to be, these are the measures to avoid tax avoidance, money laundering, those criminal activities. But it will also capture those sorts of incidents where, for example, the small business deduction, and you need to share that amongst associated corporations. So if you have a $500,000 limit on that, that needs to be shared amongst those who are associated with each other for tax purposes. What people may not realize is that if you are a beneficiary of a trust, you are deemed to own those shares, of all of the shares of the trust, and therefore are likely to be associated with any other. If you're the beneficiary of multiple trusts, and there's corporations in play, there may be some situations where people have not been reporting accurately, hopefully out of ignorance, but potentially just because there wasn't that type of clarity and
the request for that clarity, yes. Right. So if I'm a trustee and I'm listening to you right now, what should I do?
Reach out to your tax advisors. So this is really not an area, it's already, as I say, for the tax advisors a confusing time as well, not really knowing the specifics that we like to know, but they will certainly be in a position to be able to advise you about what you can be doing, what their office is doing for other people in your situation. So start looking at your trust. Maybe think, is it time to wind it up? Some of these structures were put in place at a time when the tax rules were very different, and they don't have the same benefits today as they did in terms of income
lives
splitting.
Change, things happen.
Things change. So it might be time, or if you're approaching that 21-year realization time, it just might be time to really look at your planning as a whole and determine whether or not it still makes sense to have a trust, and if so, let's find out who we need to be reporting that information on.
Yeah, real time to do a cost benefit on these things if they make sense and if they're worth what you have to go through to get it. Thank you so much.
Oh, my pleasure.